According to the latest HMRC statistics, 5 million people in the UK pay higher or additional rate tax. Now the top 10% of those, broadly those with income over £54,300, receive a third, roughly 30% of the total income in the UK, but pay 60% of the total tax in the UK. Now that is a factor that will drive behaviour. I think people are more likely to be annoyed at paying tax the higher it is, and especially if they feel that they're bearing an unfair proportion of the overall burden. Now, higher rate and additional rate taxpayers would most likely be the clients of financial advisors. And this fact, I think, needs to be made clear to them to make them aware, as if they wouldn't be already, of the amount of tax that they're bearing of the overall country's tax shield, and encouraging them of the rightness of doing something about it, not in an aggressive way, not in a way that's going to really generate the ire of the Inland Revenue and some form of attack through anti-avoidance provisions, but looking at tried and tested ways of accessing tax relief, clearly through EIS VCT and obviously pension arrangements, accessing tax effective investment through nil tax capital gains, nil tax investment income inside the investment, quite clearly through an ISA, and depending on personal circumstances, through a collective investment. Remember, with a £5,000 dividend allowance and £11,000 CGT allowance, at some a 10% or 20% rate of tax on the capital gain, that can look very appealing. And if you want tax effective deferment, once you get beyond those dividend tax allowance and CGT annual exemptions, then the role of investment bonds, UK or offshore, could be considered. So the key thing here is that to be aware of these opportunities, you will need financial advice, and people obviously need to be made aware of that. So having a very proactive approach to talk to clients about the tax burden and how you can effectively reduce it through these allowances is a really obviously essential part of the financial planning process. The financial planner can deliver what we like to call tax alpha, which is an improvement in return that is within the control of the advisor and isn't market dependent. It depends on your know-how, your knowledge of the reliefs, and then applying them to put forward suitable solutions for your particular client depending on their requirements. We cover, as you'd expect, all of those tax efficient and tax effective and tax relieved investments in the Techlink library and in the Techlink bulletins and through our videos. So I would encourage you, if you need any revision, to go and look at those before your client meetings.